Hi and welcome to a new video. In this video, we're going to take a look at how you can earn that little bit extra on top of your crypto while you are holding and waiting for that next amazing bull run. If you like the sound of that, be sure to give this video a like. I also added timestamps to the bottom of this video so you can jump to the section that you like the most. Alright, let's dive in. We're going to take a look at Blockfi. Of course, Blockfi is one of the many options that you can use to earn interest on your crypto. And we're not talking about liquidity providing, we're simply talking about a crypto bank account. The most known options out there are Blockfi, then we have Celcius, and of course Nexo. But today we're taking a look at Blockfi because a friend of mine asked me to give him a little bit more information, so hey, why not give you all an update? As you can see on the front page at Blockfi, you can expect everything that you can expect from a normal bank. So you'll be able to earn interest just a lot higher than you can on your bank account. You'll be able to get a crypto Visa card. This is, if I'm not mistaken, only available for the US right now, but they will roll it out to the rest of the world very soon. Then you can also borrow against your own crypto, and then you can trade your cryptocurrency as well. So let's take a look at the product that we're most interested in, which is the Blockfi interest account. As I said before, you can compare this to a regular savings account with your bank. Here you get a nice calculator, so let's say we have 1 Bitcoin and we leave it on there for 12 months. That would mean we get $27 per week at the current price of Bitcoin. But before you get too excited, I do want to point out the risks with all these services out there. You are trusting your money, your crypto, to somebody else to take care of them, to keep them safe, and then basically to lend them out for you, because this is exactly what is happening. This is also what is happening with the bank, but of course banks are backed by the governments and so forth. So the risk of something going wrong in the crypto space is of course higher than with a regular bank account. On the other hand, you get 8 times as much interest on these accounts than you would have on your regular saving account. So let's just dive in. How does it exactly work? First of all, and this is a good thing, the interest is paid out every month, so it will be compounding automatically. They don't put aside the interest and then add it at the end of the year. No, it's being added every month, and you will be compounding the interest on top of those. Now, this is of course the most interesting question. What does Blockfi do with account assets? Blockfi generates interest on assets held in interest account by lending them out to trusted institutions and corporate borrowers. To ensure loan performance, Blockfi typically lends crypto on over-collateralized terms, similar to the structure of our crypto-backed loans. Now, do mind the choice of words, it is typically. So I don't like the word typically because this leaves out all the options. You just have to trust them that they don't do too much of those loans that aren't over-collateralized, because that will increase the risk significantly. I also don't see any link where we can see how many loans are behind payment, so we can track our risk. So hopefully they will add something like this, and I'm going to shoot them an email with this suggestion. Maybe I missed it. Maybe there is a place where we can see which percentage of the loans is in late payment terms and which is still on track. This way at least you can evaluate your own risk. So the second option that we have is the trading account, where you can buy and sell crypto. Of course, I think there are much better and extensive exchanges if you want to be trading crypto, but it's nice to have it all in one platform. Then the third one, also very interesting one, is crypto-backed loans. So I think this is a very nice option for people who hodl crypto, because this way if you need emergency money, for example, to pay taxes or for something else, then you don't have to sell your crypto. You can keep your crypto, you just borrow against it, you give it as collateral, and you get US dollars in return, and then you just pay it back whenever you can. So on this page, of course, we have a nice handy little calculator. The minimum amount that you can borrow, that you have to borrow, let's put it that way, is 5,000. So if you want to borrow 5,000, then we have to give up 0.43 Bitcoin in collateral. So 50% is the minimum collateral you have to give, and 5,000 is the minimum amount you have to borrow. Of course, we are using crypto as collateral, and crypto can move up and down really quickly. So what happens if we have a big drop in crypto? Well, then you'll get a margin call. So in the event of a margin call, you will have to add more collateral to your account. You'll have 72 hours to take action. So if you sign up with an email that you receive on your phone or whatever, so you are instantly notified. If your LTV reaches 80% mark, then Blockfi will automatically sell a portion of your crypto collateral to bring your LTV back up to 70%. Okay, and this is of course what you want to see. So first of all, we have of course Bitcoin, and up to 2.5 Bitcoin you will be receiving 6% interest. If you have more than 2.5 Bitcoin, then everything that comes above 2.5 will only give you 3% interest. So maybe if you have more, it's a good idea to put some on Celcius, some on Nexo, some on Blockfi, and so forth. In general, that would be a good idea anyway, because you don't want to put all your eggs in one basket. Then we have Ethereum, Litecoin, USDC, GUSD, PAX, PAXG, and USDT that give you all very nice interest. Then you have your limitations for account withdrawals, and then the interest you pay on your crypto-backed loans. Alright, before we move on to the next section, if you want to support me and if you're planning to use Blockfi, you can find a link in the description of this video. This is an affiliate link. This way we both get $10 for signing up in Bitcoin. So, how do you get started? Just click Get Started, fill in your name, fill in a very secure password, and then of course use my referral code. Yes, I'm 18 years old. Yes, I read the policy. And then click Submit. Then you have to fill in the verification code. And then you have to be giving some more personal information. Due to the Bank Secrecy Act, Blockfi is required to gather this information to verify the identity of our clients. This is the same at Celcius and all the other platforms, so be prepared to give up a whole lot of information, sadly. So yes, once you are verified, you will be able to get your crypto on there. You can either deposit, withdraw, trade, or borrow. So it's very simple to use. Just click deposit. Select your crypto that you want to deposit, for example Bitcoin, and then use this address to deposit your crypto. As always, be very careful. You can't send any Ethereum to a Bitcoin address, you can't send any Bitcoin to an Ethereum address, and so forth. So always, no matter what you do, first send, for example, $10, and if everything checks out, then do the rest. Same thing for withdrawals. Just pick the one that you want, double check the address, and you're good to go. Then we'll take a quick look at the trade. As you can see, it is a very simple method. You can simply swap your coins on the platform. That's it. You don't have any real trading. You don't have any limit options, stop losses, and so forth. And last but not least, we have the borrow option. When you click borrow, it is very easy. You choose your collateral type, for example Bitcoin, and then you have a minimum loan of 5,000. So that is pretty steep. So you do need some Bitcoin in your account before you can get a loan. Let's just say 5,000, and then you click calculate your offer. So in this case, we would need 0.38 Bitcoin, and we will be paying 12.5% interest. If we would have more Bitcoin in the account and, for example, are able to only use 20% of the collateral we give, so then we need almost 1 Bitcoin, and then we only pay 6%. Then you click proceed, and normally immediately you will either be approved or rejected. So this is going really fast. It's a lot faster than on a bank, and then you'll be paid out on the wallet that you want. Now, I was surprised that you are not able, like on Celcius, get paid on the app itself. So you have to provide a wallet where you want to send the money to. Of course, you can also choose in which coin you want to be paid out. Alright, to wrap up this video, I quickly want to go over all the risks. I know this is not as exciting as interest on your crypto, but it's definitely as important. So when we go to the FAQ, we see this little section here. What are the risks with depositing my crypto at Blockfi? As I already told you in the beginning, to give you these interests, they will have to lend out your crypto to external parties. So you can lend it out to other people in the Blockfi community, or, and this is the biggest portion, they lend out your crypto to institutions. Now, where is the risk? Well, the biggest risk is the credit risk to these institutions are mitigated by credit due diligence and or collateral. So this means if they think that a institution is credit worthy, they will simply give them the crypto without any collateral. If they don't like them or it is too risky, then they will ask a lot of collateral. Sadly, this is a bit arbitrary. I think it would have been much better to see that everybody had to give collateral, just as we normal users have to give collateral on the platform. I would have liked to see the same thing for institutions, but yeah, sadly that's not the way, and this is of course the biggest risk. This means if too many institutions are not paying back their loans, the platform will fail. This is basically what happened in the housing crisis in 2008. If too many people don't pay back the loans, then the whole system fails. Next to the risk of creditworthy loans, there is of course a risk of the platform being hacked. Thankfully, most of the crypto will be in cold storage, only a small portion will be in a hot wallet, so it's a limited risk. And then of course we have the risk of you having to protect your own account. So please use a good password. Please take care of your email, that your email account is not getting hacked. And always, always, always with any project use two-factor authentication. So yeah, please take a look at all the different options to secure your account, and do secure your account, because imagine that you have one Bitcoin on there and it goes to 100,000. I mean, you are responsible for this, so take that responsibility seriously. Alright, that's it for Blockfi. If you would like to see a comparison between Celcius and Blockfi and Nexo or any other platform, be sure to put a comment. Now in general, if you have a lot of crypto, it is always safer to put it on different platforms. This way you spread your risk. If one platform goes down or one platform gets hacked, then you at least don't lose all your crypto. But again, you are trusting your crypto with all these different platforms. So be sure to check out several ones and then spread out your crypto over the different platforms. Alright, if you made it to the end and you are planning to use Blockfi, please use the affiliate link in the description of this video. This way we get both $10, so it's a win-win situation. Of course, you don't have to use it. You can also go directly to blockfi.com, but if you want to support the channel, I will be very grateful. Also, if you like this video, give it a thumbs up, subscribe, and post a comment. That's it, and I'll see you guys in the next video. Bye.